Hello, hello, hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody doing today? Crazy market, right? Crazy market, right? We got a crazy market today. So, like the title says, it's a pretty, loaded title. CLOV Stock Tanks. I'm down 61K, but I bought the freaking dip, right? Right. And guess what? Clover Health went ahead and actually bought the dip as well. They bought at $3.60. So even they're holding the bag right now. Right? So in this video, we have a lot to talk about. I'm going to go ahead real quick. What's going on, Clove to retirement? Clove is a bag holder as well. I'll be adding next week. Bought some more. Let's effing go. Holy shit. Let's go. Hype mode. We on Messiah time. My apologies. Michelle, the AC. What's going on? Al can warm up with one of those freshly made sausages. What is he talking about for sausages? Well, my girl today made me some nice homemade sausage. As you can see, these huge sausages. And you know what's funny? I asked her to make them a little extra large given the market conditions today. Okay. So there it is, Micro Badger. All right. First off, my apologies. I'm late today. On the live here. You see? Yes, the man's bloodstream is more caffeine than hemoglobin. What's hemoglobin? Right? It's phenoglobin, right? After this, everybody wants Tori to buy. What you sipping on? Let me get a cup. It's just a cappuccino. Let me show you. Before I put it on the computer. All right. So, right, that's what she said exactly, right? All right. So, what I'm going to do today is you guys can go ahead, ask questions on the live, okay? Talk amongst each other. The live chat is open. So go ahead and do that. And what I'm going to end up doing is I'm going to respond to the questions at the end. We're doing a little things differently today so we can get through the information that I have. And it's late right now for East Coasters. I'm on the West Side, so West Side's the best side, right? That's what they say, right? But yeah, I'm on the West Coast, so so with that, we're gonna you guys can continue commenting, and we'll obviously if you need clarification, if it's I'll keep checking it, but I will respond to the live comment sections at the end. So as you can see, guys, whatchamacallit here, we're down 62K today, right? And I'm doing this to be transparent, right? To show you, hey, it's okay. I'm not scared. In fact, what I do, I went ahead and I bought $25,000 more. I put in more, right? I bought the dip, right? I put 25K more, right? So just to show you, because there's a lot of people out there that are like, oh my God, I'm scared. I'm going to lose my money. And, and then maybe their portfolio is maybe 20K or 10K. And I get it. When I was at that level, I was scared too. Okay. I was scared too. I get it. I know how it feels. So, have some transparency here and, just to showcase, it's okay. I went ahead and bought the dip, right? Because I don't want to buy on the upside. I want to buy on the downside. So why am I comfortable in buying? So I'm going to go ahead and do that and go through these things. But first, let's just let me give me a moment here. Investor relations. One moment. Thank you. Got to make sure. I get this here. Just want to make sure I download. Nope, that's the wrong button. Excellente. Okay. And then tomorrow we can go more deeply over the 10Q forms. So we'll go ahead and go from there. So So let's go ahead and nope, those are the sausages. Let's remove those. Sausages are back. All right, so comment down under the questions, and I'll get to them at the end. So as you can see here, Clove is down 6.4% today. And the year to date, it's still up 12.14%. Year, it's up 300%. Interesting. I raised my price target for Clover Health to $7.25. I'm getting some irregular views. These are not your normal, typical views. I'm getting 26,300 views on Twitter, and that's a bit interesting. It's very interesting. It's a bit abnormal given how small our channel is. So we're getting 26,300 views, and it's growing. So obviously we know that it's getting to a point to becoming a triple dragon. It's an emerging dragon now. We're going to be creating a new channel called Emerging Dragon, and then for stocks that have not yet quite met the criteria for a triple dragon, so we can clean up the data, and we'll put that into to the live. Just sadly, one more thing. I'm sorry, guys. Michelle, it's getting a little hot. Can you please lower the AC, please? Yeah, it is a little hot. Yeah. No, it's not a joke. I'm hot. Yeah. It's hot because you open up the window. It's Arizona, guys. It's hot. Yeah, if you can lower the AC, like the main one, right? No. If you turn on that, then I don't want this to, so lower. Yeah. All right. All right. So we are getting some type of aberration here where we are getting a lot more views when I posted my price target. Now, obviously, people are asking, why is the price target lower? Well, because I lowered the growth rate to 23%, because, I need a couple more years to convince myself that they're going to continue growing plus 30%. We'll see. But overall, I'm just trying to figure out kind of in the interim what I can confidently say. And I think in the next 12 months, I would be surprised if we're not trading in the 6s and 7s. Okay. So there's that. Alignment Healthcare. Let's go ahead and make sure. So Alignment Healthcare is down today as well. Year to date, still 30%. But why? The question you have to ask yourself is, why is it down? Now let me go ahead and zip through this. We had kind of a weird stagnation of a VIX, the volatility index. So didn't really do much. But if you look at Humana is actually down today. And if you look at it a year, it's down to 25%. But that's not really the truth. If you look at it from the peak, it's actually down 55%. So you've lost more than half of your money. And if you would have invested it 5 years ago, you'd be down 33,000. So it's getting pretty real, guys. It's getting pretty scary. If you would have invested in Humana back in 2015, you would only be up 16%. So there's a lot of investors that are actually pissed off right now, because that's like pretty much 10 years. So 10-year investment in Humana would have only given you about a 16%. So that's not good. Okay. Now, this is something that I never thought I would see ever in my life. UnitedHealthcare is down another $4.91. It's currently $3.80. And I've never in my life would have thought of UnitedHealthcare being down this much. We have some videos we're going to be playing in regards to what people think of UnitedHealthcare. I'm going to have some, I'm going to play some very fun videos that I think are pretty funny. To do that, I need to log off of the Bluetooth here. We're going to go here. I'm going to put on my bone conduction, and open up the Bluetooth here. But I need to make sure my audio is still intact. Okay, good. So you guys can still hear me. So we're going to be watching these videos, and then we'll do some due diligence with that. But as you can see, a year ago, you're down 24.93%. 5 years, it's still protected, but for how long? Honestly, how long? If it's anything like Humana, this thing's coming down like a rock. And honestly, I haven't looked at the technical analysis, ladies and gentlemen, but Holy freaking crap. That is wow, that is a sight for sore eyes. Wow. I've never seen I've never seen anything like this before. We've seen drops like this, but that's usually when the whole market's falling. This is um this is a big deal, okay? So definitely interesting things are happening right now with United. Um Now you're starting to get investor alerts. Law firm reminds investors with losses on their investment. United Healthcare Incorporated, class action lawsuit. There's like a lawsuit happening right now with United Healthcare that pretty much saying, um, you know, the guy said, you'll see it. The CEO killing caused the stock price to go down more. No, that's not the case. They're actually it's the medical cost increasing. So I don't know if that guy's gonna win the battle. I don't think so. We already talked about this newsletter here in regards to that the lawsuit. We're gonna man, these sausages are everywhere. They keep popping up. So we're gonna go ahead and do some of our analysis in the terminal here. One thing that I want to say really quickly is if you go to Algo Flow and you go to Clove, and let me just go here really quickly and type in, let's see if we can see Algo Flow in the past 5 days, if it can give us some data. Yes. So as you can see, ladies and gentlemen, the Algo Flow tells us where the algorithmic trading is and ultimately where the flow is going um, uh, through the analysis of the options chain. This is very sophisticated data. It's an accurate tool. And it's as you can see, it's going down. And this is a prognostic indication that we are experiencing a bleed in the stock price. And it's very accurate because as the stock price was going up, one of our members was pointing it out a few days ago, saying, "Hey, algo flow is going down, so I expect the stock to go down." And then obviously it's gone down here, and obviously the algo flow went up here, and then you could see it was a prognostic indication that it went up. So this is a great tool to follow. And just to give you an example, very quickly, this is one of our third-party trading tools that's incorporated into lifetime access. So individuals that get lifetime access, not only do they get access to these tools, they also get access to the Al Stock Trades terminal. So they get access to essentially all of that, right? And very quickly, I see a question here. What is the x-axis? So the x-axis is time, and I put the time frame um, as 5 days. 5 days. So you could see 5 days. We had earnings this week, so this was the bump that it showed the earnings, and then right. So what people in our lifetime access have been doing is they've been following this, and it's been telling them kind of when it will go up and when it will go down. And excellent, excellent. And what that does is it really gives us an opportunity to be ahead of the curve. Now, just to give you an example, if you would like to purchase something like this, there's I'll just let me just show you this. There's a company called Flow Algo, right? And what you can do is you can try it for 2 weeks for $37. And then after 2 week trial that you pay for, you have to pay $99 a month, right? And that's when paid annually. It's actually more expensive than that, right? So it's $1,200 a year, right? If you pay annually, obviously, it's a lot more expensive than if you don't. And the beautiful part is with this, flow algo, you're just getting one thing, and you have to pay $100, $99 a month. First $37, then another $99 a month to get just one thing that we offer, which is included into lifetime access. So I hope, again, just trying to basically showcase the value here because it is pretty impressive what we've been able to kind of pile together. and to really just make a wonderful deal. Um, so for folks that don't know, we have a SaaS sale, $1,200 off lifetime access using alstocktrades.com for the Mastering or bundle. They both include lifetime access to the Discord, lifetime access to the software of the Discord, and also lifetime access to our software and our research and the people and everything we have. So very quickly, you go ahead and do /SR. This is the stock terminal on the Discord. You go ahead and type in CLOV. Let's go ahead and take a look at the weekly chart. We haven't done this in a while. Let's analyze this. So right now, as you can see, and this is very powerful, okay? So as you can see right now, $3.34 has been a pretty strong level of support. You can see now it's went down, bounced above, went down and bounced above. So it's becoming a point where has become the new, you could say, 60, 80 cents, right? So we have some consolidation here. If we were to just go ahead and look at the SR levels for CLOV and go back and look now at the minute, just waiting on here. So you could see now $3.47. You can see that there is some form of reversal here. We had a strong stop at $4.08. You remember we had that in the pre-market. What had detected it was at $4.08. Then it dropped back down. So it looks like $3.85 seems like the support that we have to cross on the minute chart. But it seems as 347 has been just a strong level of support. Obviously, it failed, but then we had that 335 and then it shot up. So right now we'll see if 347 holds, which is what it tested today. Looking at CLOV for the period, now looking at the hour chart. None, no, not really much. Obviously, 444, then 483. We passed those, then we can get to the moonshot phase. Weeks now, it's all about that 432, and we have to go to our quantum charts to go deeper now on that. Go to CLOV now. Let's go to period, and let's go to the day. These are all graphed by using AI to sense where the support and resistance lines are. Okay. So now what I'm going to do is I'm going to go ahead and, okay. So I'm going to do something differently here. I'm going to show you how I find this. So what you do is you click on this silver lion if you have multiple platforms within the Al Stock Trades format, and you scroll down and there's something called Advanced Al Stock Trades Terminal for my lifetime access members. A lot of you guys requested kind of, instead of flipping around and showcasing the softwares, show us where to go. So you click on quantum chart, either terminal or beta. I like beta right now because it includes another functionality. You click on this and you get this loads up. You click on this button here, makes it full screen. You type in CLOV, you load up the graph, and you do support and resistance. So again, I'm getting 384 and that 351. Let's do the hour. Look at the Fibonacci's. Okay. Looking at the daily. Okay, so 383 seems like the level here. Let's look at the weekly. So once we pass that $3.37, we're slowly now, once we get to that $4 and $4.50 and beyond, we're going to get to a point where we're going to get to that 780, 80, 89 soon. And if we go to all time, then we have the probability of getting to that 934. So if we go ahead and do all this and run the analysis for the advanced technical analysis to see where we're at on a scoring system. Hmm. See here. So we are on the let me think here. On the minute chart, we have an uptrend. The hour, we have an uptrend. The daily, we have a downtrend. The weekly, we have an uptrend. And all times, we have a downtrend. Obviously, the all times make sense. Weekly is good. Daily, we have a downtrend. And let's see. Let's analyze it. So as you can see, this is you could draw a line here and a line there, right? And you could see that this line it needs to break out and out of that. So it just failed that potential breakout. The question is that does it have the room to go up? And I'm going to explain why I believe it does. So now, let's go back. Dumb money's coming back online, as you can see. Smart money's fading away. That pretty much tells me when smart money buys the dip, they go down. Usually we rally. So I think we're setting up for a rally. We already talked about this. Bitcoin is prognostic for the S&P. Bitcoin goes up, S&P goes up. M2 money supply goes up, Bitcoin goes up, Bitcoin goes up, S&P goes up. We already talked about kind of the recovery here. It takes about 9 days to recover, then 80 days out. I think 80 days from now is going to be May 18. So I think now in the next couple of weeks, I think we are going to get over $4. Now, of course, the argument is, well, that means in May 18 we're going to be in an all-time high. Again, that's obviously not going to happen, right? But you have to understand why. What changed? Well, obviously Liberation Day, right? So all eyes now are on China and what Donald Trump wants. Donald Trump wants to cut a deal, right? At this point, right? Okay, so. This is one of the stocks that the hit piece article talked about for Clover. I found it really funny. In fact, let me go ahead and open up something that's really funny. So if you go to Reddit and go to CLOV, and go here and click on this. So actually, I posted this yesterday, May 8th, 7:45 in the morning. And obviously, CLOV went up and it started going up, and we had a great day. But interestingly, if you look at it, this is my advanced sentiment terminal analysis. And if you run the machine learning analysis, you can see that it's bearish, right? It was bearish. And I pretty much said, the advanced sentiment terminal is signaling a bearish outlook on on the stock. Let's see how it's going to play out. And of course, we saw how it played out. We're down, 6.4%. And of course, we're down $62,000. Not to worry, because we went ahead and invested $25K. Right now we're at $1.1 million. Just a few weeks ago, or beginning of the year, January, we were at 1.42 million, almost 1.5 mil, right? So ultimately, the market, has had some drawdowns. And the question now is let's dig. So now that we looked at a little bit of kind of what's happening around the world, I want to talk about a couple things and then we'll go deeper into Clover. Right? Hell yeah. Excellent. Right? Okay. So this is called the University Michigan Consumer Confidence. It's like a sentiment indicator. A lot of people are negative sentiment. And just letting you know, Michigan has a lot of Democrats, and the survey does lean a bit more Democratic. So obviously, if you look at it and analyze, they University uh, Consumer Index. As soon as Donald Trump got elected, the sentiment dropped, which I find very interesting. So that's really funny. But if we were to analyze this data real quickly and look at all the times where it's dropped to this level and analyze the signals of when it dropped, and then looked forward return, uh, how the stock market performed after, you can basically see that 9 months out, 2 years out, sorry, 9 months out, 1 year out, 2 years out, 3 years out, the market returned a lot of freaking money, a lot of freaking money, right? So again, when others are fearful, you become greedy. And again, I'm all data driven. I don't, not, nothing I'm presenting. I mean, I'm trying to think nothing I'm presenting is it's all data, guys. I mean, if you think I'm saying an opinion, please let me know and I'll correct, but it's all data. Um, Here's a consumer confidence signal will occur when value is less than 44. And you can see this is an inverse. So when stocks, when people have low confidence, stocks are low, and you can see it's just for the first time we've hit a value like this that we haven't hit before. And if we run the analysis, you can see that again, we're about to have the most skyrocketing rally that we probably have ever seen. And it's fine. It's really kind of weird. Donald Trump is pretty much telling people yesterday, you should buy some stocks. I mean, I've never thought, no doubt, I just never seen a president do that, but that's pretty cool. Let's see. Yeah, so a sustained level of advancing issues outpacing declining issues. So a lot more stocks are advancing than declining now. And we've already reset more than the high, which is a technical indication that we're probably going to have a strong momentum next week and in the next year. And this is the Zwig breadth thrust indicator. And if we were to analyze this and look at all the times where we've had this signal, you can see these signals usually come out near market bottoms. We just literally had it here. And if you look at it in the long range, it's never failed us. I mean, if this fails now, then it'll be the first time in the history that it's failed. So I'm very, very positive into this development. The macro signaling that we're going to moon. And this is not even just talking about an individual stock. Before you even go individual, I like to look at kind of what's going on, because even if a stock is performing well, if the macroeconomic events are just terrible, then of course stocks don't perform well. But I think we're going to be well. And this is what I was talking about when the S&P retraced 50% retracement from its decline. You could see that we're formulating a V-shaped recovery. That's what's happening right now. You're seeing a V-shaped recovery. And if you look at the S&P after more than a negative 5% drawdown, and look at the advancing declining line, new line, and a new high, you could see that usually when this happens, stocks do really well on the 3-month mark. We got the signal, guys, and I'm telling you, give yourself the next 3 months. It kind of falls on line of when maybe a potential rate cut's going to be. And let me just be very clear. If you think that like Donald Trump's cabinet team doesn't have access to this data, you're gladly mistaken. You are very mistaken. Secretary Bessent, it works on Wall Street. He's a hedge fund. Okay. He knows this data. He knows it well. He knows it better than me. Okay. Because he's older than me. Right. And he's more successful than me. But again, our platform is able to just kind of teach this data as an educational platform. Okay. So we went ahead and did this. Now what I'm going to do is I'm just going to go ahead and look at this United Healthcare stuff, and then we're going to go specifically into whatchamacallit, Clover Health. Let's go ahead and watch the video. Let me know if you guys hear it. I'm going to play it.
15 to 20% ChatGPT mostly. But the reality is that those advertising dollars are going to go somewhere. We're going to see them decline within Google. We're looking at this exactly the way we did UnitedHealthcare with the DOJ news. We just wanted to get away from an overweight position, still have a little bit in Google, Alphabet. We still have a little bit, unfortunately, UnitedHealthcare. And then it'll just be a question of how the stock trades, whether we get stopped out of it or not. Lots of reasons to like it, but a big reason and a huge catalyst earlier in the week that we had.
So that's a big thing. If you haven't caught it, he talked about United Healthcare and he related it to Google. So that's actually pretty important to talk about, ladies and gentlemen. So let's go ahead and spend some time. So he pretty much said that Google's search revenue is going down. It's getting disrupted by ChatGPT. Then he pretty much talked about how United Healthcare, he doesn't want to be overweight that stock given the DOJ. But why is he relating Google and United Healthcare? Well, they're both getting disrupted. How are they getting disrupted? Well, medical costs are actually increasing. So they're not able to keep up with it. And this is a discussion we had before. We have over 800 videos that talk about that. Let's go ahead now and talk a little bit more about this lawsuit. Share this new tab, and let's go ahead and watch this video.
Tonight, a UnitedHealth Group stockholder is suing the company now in federal court, accusing it of artificially bumping up its stock price.
The lawsuit says the company gave investors misleading information just a day before UnitedHealthcare CEO Brian Thompson was shot and killed in New York. That was in early December. Fox 8's Mike Manzoni went through the court documents. Mike, the stockholder is calling the company reckless.
Randy and Kelsey, he accuses the company of misleading investors by giving a rosy picture of its stock price. Roberto Faller says UnitedHealth Group never told investors that Thompson's killing hurt profits. He says in December, the company forecast a stock price of between $28.15 and $28.65 per share. The investor says the company stuck with that outlook the month after Thompson's death. But he claims that in order to achieve the figures it gave stockholders, the company would have had to continue using what he calls anti-consumer tactics, like denying coverage. And he says with all the scrutiny the company faced after Thompson's killing, it was no longer willing to do that. UnitedHealth Group sent us a one-sentence statement tonight saying the company denies any allegations of wrongdoing and intends to defend the matter vigorously. The investor is requesting a jury trial. Of course, we will keep you posted. In the newsroom tonight, Mike Manzoni, Fox 9.
All right, Mike.
Excellent work. Excellent work. So he's basically suing them because they misled the numbers because a CEO died. Well, if you look under the hood, the reason why they numbers decline is because medical costs is going up. And because that's overutilization. I see what he's trying to say. He's like, well, they can't basically do these bad practices anymore because they're being scrutinized. I get it. I mean, but I think they might win the case, United Healthcare, or they might settle. But he's formulating a jury trial because he knows United Healthcare is gonna, in front of the jury, everyone hates insurances, but the jury can be, I'm thinking, selected to a point where they might be able to self-select jurors that don't know crap about insurance and never been sick in their life. So there's ways, guys, to bypass these things, and they can settle. Now this is our beloved Jim Cramer right here. This is a Jim Cramer here, and we're going to talk about this because this is very important. This is going to be a very entertaining video here. Okay, so let's listen.
All right, let's get to stop trading. Shares of UnitedHealth yesterday, in part because of the changes in Medicare Advantage, had a good day.
I'm using it as a metaphor.
Okay.
Right now, there'll be a lot of fund managers who say, why do I need any of this? Just give me stocks that are American stocks that have nothing to do. And UnitedHealth, which sells at 19 times earnings, would probably sell at 25 times earnings in the near-term future because UnitedHealth actually defines what I'm telling you people want. Up another 12 today. And that's how money managers work. They'll buy Humana, they'll buy UNH, they'll buy Cigna.
Does the cost of medical care go up because the equipment's coming from somewhere else and suddenly it's got a tariff on it?
No, Medicare's going to pay for things. We just got that new
Medicare Advantage.
Yeah, medical advantage, which, by the way, I don't think someone asked
so
me,
it doesn't
Jim, are you really saying
through
medical
to the
advantage is
cost
that great?
of care
No, it's
and
not.
therefore insurance rates and they get hurt somehow? No.
No, you're looking for immunity. You're looking at Cintas.
All right, so I'm going to go ahead and replicate this for you guys and just kind of replicate this. I'm going to act like Jim Cramer. Okay. I'm going to tell you how fund managers work, okay? I know how the system works, okay? Fund managers, basically, they want to buy companies that are not affected by tariffs. Give me a company that's not affected by tariffs. Healthcare. Healthcare is not affected by tariffs because tariffs don't affect the flu or a virus. A virus is going to enter the city. They're not going to have someone say, you need to be charged 150% tariff to infect United States citizens, right? That's what he's saying, okay? And he's saying that, healthcare is a buy, and that's what's going to happen. I get that. I understand that, which is why I'm buying Clover Health, right? Because, yes, tariffs don't impact Clover. They don't, right? But the problem is healthcare is currently being disrupted, okay? And are institutions buying United? Are they buying Humana? No, they're not. They're not. Maybe a little bit of a Humana, maybe we'll see in our institutional graphs regarding the SEC filings, but they're not. They're not. So that's what he's saying, right? And when he talked about this, the stock was $565. Just so we are clear and we are speaking the same language. Currently, just to be very clear, because things happen. The stock is $565. Right now, it's $380. Okay. In fact, if we were to go ahead and look at when this video was posted, it was posted on April 9th. April 9th, you go a month out. April 9th was right around here. That's when he made the video, and it went down 34%. So he pretty much basically, like Jim Cramer does, talks and peaks. And the question you have to ask yourself is, was this on purpose or was this on accident? And that's kind of the situation that we have to ask ourselves here. And if you look at the comment section, Dumb and Dumber, it's now at $3.95. And actually now, the comment section here says, it's now at $3.90. Let me zoom in. It's now at $3.95. Well, that was 2 days ago. It's actually now at $3.80. This guy's a criminal. Okay, I'm not gonna read that. Okay, all these things. Okay, so this is why we're down. Everyone's like laughing. Let me give him a like. So that's the situation here. But let's just kind of finish the video.
Care is going to pay for things. We just got that new
Medicare Advantage.
medical advantage.
Well,
By the way,
he doesn't know what he's talking about. We just got that new Medicare. He's talking about the effective rate increase of 9%. Okay. So as you can see, this guy's trying to act like he knows what he's talking about. The guy doesn't. I mean, yes, he knows more than the average, but he doesn't work for you. He works for the hedge funds. You don't know if he's basically making this video so the hedge funds can sell on this to retail investors for exit liquidity.
Medicare Advantage.
Medical advantage, which, by the way, I don't think someone asked
So it
me,
doesn't
Jim, are you really saying
through to
medical
the
advantage is
cost
that
of
great? No,
care
it's
and
not.
therefore insurance rates and they get hurt somehow? No.
No, you're looking for immunity. You're looking at Cintas, okay? Cintas, the uniform company.
Yes.
You're looking at paychecks.
Yes.
Now, I know this small business confidence was down, but they're
Okay.
still starting. But that's the new thing, David. You're going to hear people come on, like on Two Stock Lunch or whatever, and they're going to say, you know what? I like UnitedHealth and Humana here. Why? Well, they're totally independent.
Totally domestic.
Right.
Yes.
And then people are going to say, so I just gave you UNH at 5.
He's acting like, oh, they're totally domestic and tariffs can't touch them. Yeah, but the problem is they're businesses that are burning. There are businesses right now that are intrinsically not able to take care of their patients without revising down their forecast, decreasing their profits and their bottom line, right? And they need to use AI, and which AI is out there, right? So I don't know, Clover. So let's go ahead and look at this video now, right? Let's go ahead and listen to this. This guy's coming in buying for lightning round.
Michael Dempsey, Michael.
Congratulations on 20 years, Jim. Still another 20 years.
I hope so. If I can pull it off, I will. What's going on?
Given this company's recent earnings miss and the rise in medical costs impacting its bottom line, do you believe the stock's current valuation presents a buying opportunity, or are there underlying issues that the investors should be cautious about? The company is UnitedHealth Group.
Okay, it's going to be under pressure for some time because a lot of companies a lot of big pension funds and mutual fund managers thought everything was perfect. But I am going to say today at $400, I would indeed start a position. I've been very negative on UnitedHealth. From 6:30 down to this caller right here, I would start a position at $400. That's a big change for me. Let's go to Barry, Connecticut. Barry.
So that's obviously, as you can tell, that's bullshit, because he just made a video of United Healthcare at $565. So $565. So $565, right? So over $500, right? He made a video on that saying you should buy United Healthcare, right? So he made a video when it was at over $500 saying that you should buy United Healthcare. And then the stock continues to drop more. And then it drops down to $400, right? Or around 400, right? And you can see here, if you were to look at it, this was about 8 days ago on April 30th. You go to United Healthcare stock and you go April 30th, the stock went ahead and dropped down to, 411. And he's saying he's a buyer at, around the 400 region. And he was very critical of United from 630 and down. He was saying he was very critical. That's a load of bullshit, because he just had a video just a month after at the peak saying buy it at $568. So you could start to see this guy's contradicting himself, and he is a piece of shit. Okay. But it's not like it's not like he's doing this on accident. No, he's doing it on purpose, right? Because he needs retail investors as exit liquidity. And I used to, I have to be honest with you guys. I used to listen to Jim Cramer when I first started investing, and I didn't know much. I was a beginner, and we all learn from our mistakes. And I have to tell you, Jim Cramer lost me a lot of potential gains. I trusted him in the beginning because I was, I thought people get their information from him, and that's how they invest, right? I mean, I know, right? But that's right. So that was me. Now I built my own software company that has one of the most advanced AI platforms out there to conglomerate all the data to help you make money. And I went from homelessness to becoming a multimillionaire. And I believe my system, my platform, my methods, and my team can help you do the same. Plain as simple as that. So there's that. Let's go ahead now and stop the sharing of this bad boy and just share it in the normal screen here, okay? And let me just take a little break, because that's a lot of talking. Hold on, just take a little break. I'm a little tired. Oh, Jesus. All right. Okay. Let's go back to the again to get to for folks that don't know, to get to this, just as a reminder, you need to go here, Quantum Chart Terminal, click on this, and then now you have access to this. I'm just going to go to Clove real quick. Now I'm going to go a little bit more deeper for CLOV and do the analysis. So we're still waiting for Q1 data. Still waiting for that. So once all that piles in, I'll know exactly what's going on. But ultimately, we're breaking out. So that's what's happening. So if we go to analyst estimates, ladies and gentlemen, I have some interesting observations I would like to share with you, if you allow me to. So here is Clover Health on the analysis side. And I have something interesting to point out to you all. Give me a moment. Hold on. Give me a moment, guys. Thanks, Michelle. All right. Okay, so this is going to require some massaging. Okay. Um, and we're all data focused, guys. Then there's a lot of data, and we're not a channel that likes to bullshit. So stuff like this takes time because it's just due diligence. I look at the data, and I obviously, it takes me a couple seconds to understand it, but to teach it and to be on the YouTube channel, it looks that made my dog bark. Yeah, I know, right? I'm sorry. To teach it, it's a bit of a it takes time. So sorry. Just give me a moment right now. Let me just figure this out here. Get all the information. Yeah. All right. So I'm gonna exit all these now. We don't need this anymore. All right. So what I'm gonna do now, ladies and gentlemen, is essentially showcase you analyst estimates from our stock terminal. Let me just take this off here. Hello. Okay, good. Kind of squeeze a little my head a little bit here. So what I'm going to do right now is I'm going to share with you our software that gives you what analysts are thinking. Now here's the problem: not all the analysts have completed their evaluation, but some have, and it takes the ones that upload their evaluations gets mixed in with all the other analysts' evaluations together, and it mixes to raise the average of the prediction. Now, you have new and old, of course, and this kind of mixes the average, but I think in the next week or two, we should get more analysts that were on the call to give their predictions. Let me just be quite frankly honest. I believe if, these institutions, why would they? Why would they want to help you? Maybe you might get 1, 2 good analysts, but why would they help you? They don't care about you. They don't like you, and they don't care about you. So that's the reality, okay? So if we go to net income, and if you look at right now for 2025, they're expecting a net income of negative 26 million, okay? Now, I believe that's highly unlikely, and I can look at the quarterly data and look at their analysis from the net income side, go all the way to 2025 Q1, move it up to the top right over here, and click on it. And they expected Clover to be down negative $19.5 million. Because last year they were down negative 19 on average. That's bullshit. What was Clover's? It was negative $1 million. So that's around a 90+% improvement. Okay. So what are they expecting Clover to be next quarter? Negative 4 million. Well, I believe that could be potential bullshit because last year they were up actually, I think by $6 or $7 million. So it's very clear, there's discrepancies here. But again, I think these are old numbers. But what's interesting, if you don't recall, and this is where we get excited. You remember how they had Clover Health being negative all the way until finally they broke out in 2028? Go watch my old videos like a week, like a month ago. What you'll basically see is that they never had Clover positive until 2028. But now look what you see. You see it positive now. Excuse me. Ooh. Excuse me. Hopefully you guys didn't hear that. So allergies, right? Get the door open here. So beautiful view. So now they have it positive in 2027. And they have it where Clover is expected to make $70 million in cash in 2027. But that sounds incorrect. Why? Because look what they have Clover making in 2026. Negative 8 million. That's interesting. That doesn't seem correct. Why? Because they have Clover making negative 26 million this year, which we know that's not correct. So I think 2027's estimate may potentially come in 2026's. And obviously, I think it's going to be higher. But you could see, based on the long run, you could see that, look at this cash that Clover is going to be generating. They, in 2029, and we know that their analysis, exactly, it's negative 1 million now. And if you look at what they were estimating it to be on the quarterly side for Q1, they're estimating it to be negative 19, which is bullshit because it was negative 1. You see what I'm trying to say? It's like a 90% off. So imagine if they think that Clover's going to grow $160 million in 2029. Imagine what it could be. Right? So now that I said that, now let's go ahead and move to this screenshot. Okay. This now shows the one analyst that updated his analysis for the second quarter, the third quarter, and the overall current year for 2025. And this analyst thinks that Clover is going to make, a positive 3 cent, 3 pennies of money, in terms of its EPS. Now, of course, we could go ahead and do some magic, see how much they're estimating Clover to make. We can say this times. So they're expecting Clover to make about $14.88 million in net income. And all I did, again, this is not rocket science, I took the EPS of their estimation and multiplied it by the outstanding shares they have, and it's 14.88 million. And now, interestingly, they think that Clover in the current year, the current estimate, they think that they're going to make this year. They're thinking they're going to be profitable this year. They're thinking Clover is going to be profitable this year, which is, again, I'm more conservative. I think it's next year. This is just one analyst. So you don't know if this analyst is trying to get the hype up, but it may be true. They may be profitable this year. Who knows? I don't think so. I think it'll be next year. But let's just assume what this analyst is. Let's just get in their head.
0.11.
So if you take that and then you multiply it by this, they're expecting Clover to make $54.56 million of income. They're expecting Clover to make $54.56 million of income this year. So all I did is I took the 11 cents here and I multiplied it by 496 million, and then I got 54.56 million. Now, next year, this analyst thinks that Clover is going to be at 18 cents per earnings per share. Okay, that's fine. We'll go ahead and copy this and we'll just say 18 cents. And to do that, now they're saying next year is 89.28 million. So let's focus on their next year's estimate. Because again, I don't think they're going to be profitable this year, but I do think Q2 is going to be profitable. Like I told you, I think Q2 and Q3 are going to be profitable, but I think Q1 and Q4 obviously unprofitable, but maybe the potential, I could be wrong. I mean, listen, I'm conservative, okay? I'm conservative as hell, right? I'm not going to go ahead and, right? So if it's obviously profitable, I make a shit ton of money, right? I'm not going to argue, of course. But again, I'm just trying to set expectations. But let me show you something, okay? Let's focus on their 2026. Their 2026, they're projecting around $89 million. Now, let's go show you my analysis here that I created. You remember that video, that long video where I showed you this analysis? Let's go ahead and do that. Now, let's go ahead and just kind of start from scratch here. And let's kind of just insert a couple things here. And again, very quickly, for folks that are interested in our platform, in our software, in our community, what I'm going to end up doing is I'm going to start hosting Zoom sessions where we go over our stock picks that are triple dragons. And I'm going to go ahead and host these sessions from an educational standpoint. And they're going to be internal into the lifetime access members. So if you guys want access to that, to the data, to the research, to the 2.5 billion outputs of institutionally graded data, to the lives that we're going to have internally on the lifetime access platform that shows how once this, especially this portfolio, turns into a multi-million-dollar portfolio, as this will be the public portfolio, we're going to go ahead and do the wheel strategy. And essentially, I'm going to be teaching you how to ultimately make, $200, $300, $400, $500,000 per month, and even more. Okay. And I'm going to bring experts that are way smarter than me, right? Into this, to basically, be able to bring different viewpoints of what you can do and how to make money. Again, it's all about community, right? And as you can see, Clover Minded, Zoom was fun the other day, and it's very high quality. You're able to ask questions. You're able to say, hey, Al, I don't get this, That's That's the perks of lifetime. Okay. Obviously, there's a lot of other perks. I would say this is the best value you could get online, right? You can speak to all the lifetime members. Go find me a product that's this good, right? I'm all about value creation, and I'm teaching you something of what took me 15 years to do. I'm teaching it to you so you can get it done within less than a few weeks to a few months. That's it. Okay. So with this analysis, let's go ahead and get back to it. So this is for this is for 2026. So I'm just going to estimate Q1. So this is how much money they're going to make here. Okay. What I'm going to do now is I'm going to turn this into, millions. Okay. So I'm going to say translate. So I'm going to go ahead and I'm going to go here. I'm going to go here, divide by 1,000, 191 million. Or actually, let's not do that. Let's actually put the whole number down. So to do that, equals, we're going to multiply by 1,000. We're going to go same here, equals, we're going to multiply by 1,000. Okay. Then we have the outstanding shares. Which is 496. Okay, that's 496 million. We're going to just put general. And now we're going to say EPS, and this will be per quarter. We're going to say this divided by this gives you this. We're going to say this divided by this gives you this. Okay. All right. So just to be very clear, this is the projected Q1 of 2026. This is without the 14% increase. Where do we get the 14% increase from? The rate change of the effective rate, which is around 9%, and the 3.5 stars to 4 stars, which is the 5% increase. 9 plus 5 is 14% approximately. So this side is the 14% increase. This side is without increase. Okay. Does that make sense? So this is with the plus the rate change. This is without. And you can see these are the earnings per share. Let me think. Yes. For whole year. So what I did is I took the quarterly, I multiplied it by 4 for the full year of 2026. Then I converted it to millions. Then I divided by the outstanding shares. I have a question. I'll stock trace. Isn't that using 2026 full year according to your chart? Wouldn't you want to use 47? So yes. So my apologies. I'm calculating the full year. So I'm doing the full year first, and then we'll just divide this by 4 to give you the per quarter. Right? Fair enough. So what I did is this is Q1 of 2026 without the increase of the stars and the effective rate. This is with the increase. This is about $27.9 million per quarter. This is $47.9 million per quarter. You multiply it by 4, you get $111 million here, $196 million here. It shows you how much money you make from that effective increase. Pretty insane. And then you get 22 pennies and 39 pennies for the full year. Then now you want to do EPS. Does that make sense, John? Does that make sense? Okay, EPS per quarter. We do that now. We say equals this, divide by 4, equals this, divide by 4. Excellent. So what you're basically seeing now is going back to this analyst, what you're seeing now for next year, this analyst is doing 18 cents per quarter. Okay. And what he's doing is he's using this projection because he's using it's near like it's not rocket science. 18 cents, which is it, like which which number is closer, 39 cents or 22 cents? Obviously the 22 cents. This is 18 cents and this is for the full year. Okay, the full year. Okay, so this makes sense, right? Does that make sense? Right? So it's 22 cents for the full year. So obviously, like, this analyst is undervaluing Clover a lot, actually. He really is. But I don't understand is how could he be so bullish for 2025, but not be as bullish in 2026? It's almost like if Clover doesn't meet 2025 estimates, he wants like a sell-off to happen almost. It's like overestimate. I'm telling you, 2025, I don't know, right? Yeah, I don't know. To make Clove, that's what it looks like, to make Clove look bad for 2025 so people can buy the dip. I don't know. That's why I'm not really giving any estimate. That's why I'm not really giving any estimates for 2025 because, I'm right. So, but for 2026, I'm a bit inclined to agree with his analysis because when we projected Q1, for 2026, we projected it to grow 33%. I'm assuming basically I'm assuming that this 33% increase is going to happen in 2026, right? He's saying, yeah, but we can make it lower. So let's do 18 cents. But what I'm trying to understand is this guy isn't calculating the 14% increase. Or maybe he is. Maybe B-Rad, are you following me? B-Rad Cooley, if he's calculating that 14% increase, and still gets the 18 cents EPS in 2026, then he's really expecting Clover's revenue to drop. But by how much, we can reverse calculate it. But I think he's undercutting them, I think. So that's why I'm not going to bother calculating it. Because, the guy who's probably doing this analysis, he probably watches my videos and learns from me, right? So, I'm not trying to say this like a pompous asshole, but I'm not gonna waste my time, right? I think he's figuring on a lower growth number. That's what I think but here's the problem. Q4 2025 grows around and Clover grows another 33%. Boom, right? So, right? There it is. 0.8 times 2, you get next to your so he's undercutting them by 50 cents. So that's what he did. He probably calculated that 14% increase and took half and divided by half. That's pretty much it. There's your analysts, right? There's your respective analysts. And he pretty much did, this is what he did. He did equals this, divide by 2. Whoop, what'd I do? Oops, sorry. He did this, equals, divide by 2. That's what he did. And there's your 19 cents. There it is. That's what he did. And he did it probably off of the 14 cents. Right? And that's how he got this. What I'm trying to teach you is how to do it effectively on your own and become your own analyst. Right? So when you start understanding and learning this, first off, you have to have the data. And you have to, which is what we have, the Al Stock Trades Terminal, the premium terminal. That's number one. Then you have to have the educational platform. You have to actually know what these means, which we have, which is in the Al Stock Trades website. But then you have to have people to say, hey, can you help me look at this? And that's B-Rad Cooley. You got access to all these, people, and then, so we're building a community, and I think I got a couple comments here. I'm not a numbers person. What I am seeing is a person that understands smart people working together for a common goal. You don't need to be a genius. You just need to be smart enough to spot one toy. Exactly. Well, yeah, there it is. Absolutely. 100% Critter Traps. Right? Oh shit, what's going on? Hey, how you doing? I just came back from a party in my bed and you see you live. Yeah, man. Here's the thing, guys. I'm an obsessive, right? I am obsessed with numbers. I'm obsessed with data. I'm obsessed with winning, and I'm obsessed with Wall Street, right? And I like numbers. And I mean, if you're going to go ahead and join a platform like us, you need someone who has these obsessiveness. And I hope the people that we attract have, like B-Rad, have the same obsession, an obsession to learn. Right? That's what we like to attract. Elites, B-Rad Cooley. Yeah. Tent community, right? Disregarding. Yeah, exactly. That's pretty much it. That's how you manifest. All right. So there it is there. So that's pretty much what so 10, so my prediction next year is Clover's going to be anywhere between 22 cents to 39 cents of EPS, with an approximation of $111 million to $191 million. And if you want to go ahead and you want to do some analyst bullshit, you could go ahead and say, my estimation, just cut both by half, is anywhere between $50 to $100 million of net income. And we can go ahead and we can just be like these other analysts. Okay. So there's that. Right. So let me think. Give me a moment. I have one thing to add. B-Rad, you still here? I have one thing to add. I have one thing to add. Could it be that these 2025 numbers here, could it be that this analyst may be predicting a SaaS deal to announce third or fourth quarter that could potentially bring Clover to net income positivity? It does have high margins. That's the only way I can see Clover being profitable this year, unless we figure something out. But could it be? I mean, if they become profitable without SaaS this year, holy shit, number one, or the second is if they use SaaS to become profitable, that's another holy shit moment too. So I mean, double holy, right? So yeah, that would make sense. So we'll see. Well, I mean, that's what they're saying, right? I was guesstimating more other, yeah, exactly, other income in Q3, and we'll be able to figure it out. I mean, honestly, look, we could do the math here. I mean, if this, like, here, let me watch. If other income here was, I mean, watch. I'm just gonna do something here, okay? Let's say Clover gives us, 25 mil. They give us 25 mil, right? If Clover gives us 25 mil, make sure I did this right. Okay. 25 mil. And then you take this number here. Oh. You'd get $18 million. Well, let's say if they make 25 million. You see how automatically $25 million makes this thing 18 mil? You see how, like, SaaS, even if it's a little bit, you see how SaaS just pushes us to profitability? You see how just a little bit of SaaS pushes us to profitability, guys? So this is pretty interesting. Yeah. This is very good. Yeah, SaaS is monster margins. You get, I mean, it's literally pure profit at this point. So yeah. Okay. One more thing, and then we're gonna go ahead and dig deeper in the SEC later on. Given the time frame and how late it is. What we'll go ahead and do is I wanted to show you this new data. As you can see, Alex, I'm very committed. Like I told you guys, I'm an obsessive. How do you think I went from, homelessness to becoming a multimillionaire? I got this one here, and I got another one with 15 mil. I mean, how was I able to do all this? Right? It's because I'm an obsessive. I obsess. Okay. So today, Clover released in their documentation, the one that they give to the government, that they bought $18.2 million from this time frame, January 1 to 31 and February 1 to February 28, and they bought during this time frame, and the average price that they bought is at $3.60. So Clover bought the dip at $3.60. Okay, so Clover bought the dip at $3.60. And right now, Clover, they put 18 mil, over 18 mil. Clover's at $3.51. You see how stupid the stock market is, right? Because of UnitedHealthcare being down, right? So if you go ahead and let me just give me a moment. One moment. Look how stupid retail investors are. So you can see how stupid they are. Retail investors, okay? Retail investors This data is from Robinhood, and it only tracks the buying and selling of specifically Clover Health and any stock you want from Robinhood members. And you can see right now that Clover on May 7th, which was 2 days ago, 21% net sell. And then to May 8th, they were selling, right? So how did the stock go up? Well, because institutions were buying. And then guess what? Today, most likely, they were selling. Why would you sell a stock at $3.50 when the god freaking damn business, excuse my language for using God's words in vain, bought the freaking company at $3.60? Why would you do that? Because financial literacy, because these retail investors don't know how to read a document. They don't know numbers. And guess what? That's your edge. That's how you make money. Okay? Trust me, there's people on platforms that have so many hundreds of thousands of subscribers that they don't know what the shit they're talking about. Right? All right. Excellent, excellent. That's why I bought 25K. I put 25K this week, right? And I put 13K too today, or 12K. So I'm buying the dip. I bought it before at $3.28, and I bought one today, right? I got it at $3.60, then it fell down to $3.50. I'm about to buy more next week. Oh well, right? You can't get right, but I did buy at $3.28 the other day. But I got a bunch at 60 cents, so I can't complain, right? So there it is. But yeah, ladies and gentlemen, the data is in the details, and for individuals that want to secure lifetime access, we will be, we are getting closer to ending this deal. As you can see, it's a really good deal, $1,200 off lifetime access. So take advantage of this coupon. It's one-time payment, access to everything we have. Take advantage. And that's it, guys. Let me go ahead and see if they have any questions. Let me see here. B Rob. First I've heard of a bed party. I guess I'm getting old. That first time I've heard about it. Okay, we're getting old too, brother. Just looking at the questions. Yeah, he's aiming for a settlement. I agree, John. All right. Yeah, that's it, guys. All right, ladies and gentlemen, that's all I have for you. I wish you the best on the weekend. And lots of work to do to dissect this beautiful SEC filing. I'm going to go ahead and dissect it, and then I'll release my findings on the Research Edge for all my lifetime members. And to all my lifetime members, we will be hosting a lifetime on the Zoom, so you guys can ask me questions to how to use the software, and we can have a nice tutorial video for folks to start calculating intrinsic value. And soon we will make a video on when we're going to be doing covered calls and cash secured puts. So it's looking pretty good. Pretty tired today, guys. Very tired, but it's always a pleasure speaking with you guys. Love you all. And, hit the like button, smash the like button, a lot better. Right. And there it is. Love you all a lot. I'll see you on the next one.